Hi guys, welcome back. Let's talk about bias. So we know that bias is something that keeps repeating, that is very important, that we need to set our bias before starting to trade. But how do we actually do that? And what is actually the bias? Well, if we go and we look at the definition of bias, bias is a disproportionate weight in favor of or against an idea or a thing, usually in a way that is unfair. So, bias is something that is disproportionate and it's something that is somehow unfair. So, let's go back to the concept of fair. Something that is fair, it means that it is a 50-50. 50% chance that one thing happens and 50% chance that something else happens. But bias means that it's something that's unfair, that's something that is disproportionate. And so a bias, for example, is going to be to set and to believe that something is going to happen 70% of the times and that something else is going to happen 30% of the times. How do you apply that concept in trading? And what is then the bias in trading? Having a bias in trading means having an expectation that the price will move in one specific direction. And so we have an expectation, right? But are we 100% sure of it? Well, the answer is no. We have an expectation. We don't have the certainty that something is going to happen. And so, as we were saying before, it's a 70% and we believe that something is going to happen versus a 30% chance that something else actually happens. And so, there is still a chance that the price does something different of what we were expecting, and that is totally okay. So, we were talking about the fact that the bias in trading means having an expectation that the price will move in a specific direction. And we are going to always be trading according to our bias. So we need to be sure how to set our bias. Okay, we don't need to be sure about our bias and we can get it wrong sometimes, but we need to be sure how to set our bias. And so to set our bias means to know how to set our expectation regarding price movements. And now, guys, don't get surprised. You know me, you know this mastery a little bit by now. You know that bias, as every other ICT concept, is really tied with time. So, bias means an expectation of where the price wants to go in a specific time frame. And the bias can be, for example, monthly, weekly, daily, or even hourly. We can have a hourly bias. The higher the time frame, the more freedom we have to actually be right in our bias. One type of bias that is very important for us to have is a daily bias. And it's very important because this is a bias on which we are going to be trading, which we are going to be setting our expectations. So we said before, bias means expectation of where the price wants to go in a specific time frame. And so when we talk about the expectation of where the price wants to go, we are referring to the price going either higher or lower of a previous high or of a previous low. And when we talk about a specific time frame, when we're setting the daily bias, we're going to be talking about the 1-day time frame. And so a bias that is meant to happen, an expectation of where the price wants to go in the next 24 hours. And so when we talk about daily bias, what we are trying to answer, the question that is bugging us is, where is the price going to be in 1 day from now? I want to show you one of the easiest way to form an expectation and something that you can do on a daily basis to set your expectation for the next day. And so we're going to be using the level of a previous day and their highs and their lows. And so we're going to be using that level to guess where the price is going to be going next. Remember, guys, having a bias does not mean having a narrative. Having a narrative means knowing why the price is moving in a certain way and having an idea of, oh, I believe that, and I'm just going to give you a quick example. There is a fair value gap and the price is attracted to it. So there is this level and that level, and there are all these other confirmation on higher time frames. So I believe that the price is going to be going higher, lower. Bias is not that. Bias is not narrative. Bias is simply having and believing, having an expectation of where the price is going to be moving next. And this time, guys, instead of going into high levels of theory, let's be more concrete. Let's take an example from the price movements on the 1-day time frame. And so each one of the candles that you see here are worth 1 day of price movements. We have here a last candle, and we have here the high of that candle and the low of that candle that I marked here in green and in red. We know that we need to be looking at the wicks as well. We are not just going to look at the body of the candle, even if we need to see where it opened and where it closed very clearly, but we are going to especially focus on the wicks. Now, do we expect the next candle to take out the high or the low of the candle that we see here? So are we expecting the next day price movements to take the low of this candle or to actually take the high of this candle? Well, let's take it easy and let's start by observing what happens next. So the next candle, this happens. So the next candle goes actually lower than the low of the candle that we have signed before. In this case, guys, you can notice, and I have highlighted it here with an orange square dot, that we have a level in which the candle closed, and that level is actually lower than the previous low, so the low of the last candle. What do I mean with that? Let me repeat. We can see here, and we are noticing here, that this candle, the last one that we see, closed lower, and so the orange line with a square, than the low of the previous one. And so the previous low is here highlighted with the red line. That is going to mean that when we see a candle that closed lower than the low of the previous one, that we are going to expect the following candle, the upcoming candle, to go even lower than the low of the current one. Guys, please notice, we are looking at one candle in relation to the other candle. I know that you went already through a lesson about candles, and here we are showing their powerfulness really at the maximum level and how they can help us set our daily bias. And so we are expecting that the next candle would go even lower than the low of the current one. Now that we have set our expectation for the next candle, let's chart our highs and our lows for the current candle, so for the days that just has passed. And so we have here our low, and we expect it to go even lower. We are expecting the next candle to go even lower than the low here highlighted. We are expecting the next candle to take out this level of liquidity that you see here in red. But, and this is a big but, we do not know where that candle would close. So we do not know where the next candle is actually going to close. Let me repeat this very quickly. We are expecting the next candle to go lower than this low. We are expecting the next candle to take out this level of liquidity that we see here in red. But we do not know where that candle will close. So we're not saying, oh, the next candle is bearish, or oh, the next candle is going to be bullish. We're simply expecting the price movement in the next day to touch upon and go even lower than this level here in red. Our bias is set for the price to reach lower than this level for tomorrow's candle, but we do not have an expectation of the target of that day. So the price could be going lower or closing higher, and so on and so forth. But now let's regroup and let's see if our bias, that the price is going to go lower and touch this low, is actually correct. Here is the candle of the next day, and we can see that our bias was actually correct. This next candle went a little bit lower and touched lower this level of liquidity. Now, we set our expectation for the next day. Let's observe what we have here. We have, first and foremost, the red level, which was our previous level of liquidity, and then we have our closing price in orange. And when we look at it in comparison to the previous candle, we can notice that the price closed higher than the previous low. So the price actually did not, like the price went lower, but it did not close lower. And so considering that, we're going to set our bias and we're going to state clearly, okay, we do not know. We don't have a clear bias for the next candle. We are not sure what the price is going to be doing next. Why? Because this candle, except touching the low, the closing and the opening of the candle is within the range of the previous low and high. And so that tells us that we don't have a clear bias for the next candle. So we're going to just let our expectations go and be open to the price movements. Remember, we have here our high and we have here our low of the last candle. First, we're going to be looking at the closing price, and we keep an open mind for the next day, expecting the price to cross either the high or the low and to let us know what he wants to do. It can be a reversal, it can be a continuation of this trend. At this moment, in this specific moment in time, we do not have a bias. Remember, guys, you can have a narrative, but that doesn't mean that you have a bias. Okay, now let's see what the price actually does next. And looking at the price next, we see these big bearish candle going much, much lower than the low. So in this case, we have here the previous high and the previous low. And here we have the level at which that candle closed. So our bias for the next candle is going to be to go lower and to actually take over the low of that candle. So let's check it out. Our bias is that the candle is going to go lower and it's going to take that level of liquidity. Now, what happens next is exactly that. The candle opens and keeps going lower. So our bias that it would be lower was actually correct. Now we're going to mark our closing price of the previous candle and our closing price of the current candle. So now we're going to mark the wick of the previous candle and the closing of the current candle. And we're going to ask ourselves, okay, again, our bias is that the price is going to go lower. Lower of what? Lower of the wick of the current candle. Let's see what happens. And no, actually, we are wrong. The price did not go lower. The price did not touch upon that level of liquidity. So our bias was wrong. Now, we chart again the levels. We chart the highs and we chart the lows. So we see that our bias did not get respected. The price stayed within range. So for the next day, we do not have expectations again, but we wait to see where the price will want to be going next. Is it going to be a reversal, a change of trend, a continuation? You know, guys, sometimes it's really brave to say simply, I don't know, when we don't know something, and we keep in mind that we need to see what's the story that the price wants to tell us. We're not supposed to know everything. We are simply supposed to know when we are more sure about something and when we are actually in doubt if something is going to happen or not. Now, what's happening next? So let's see what's going to happen next with the next candle. Here it goes. And the next candle actually took out, first and foremost, the low, and then it went higher and it touched and took out also the high of the previous candle. So the next daily candle took away both the highs and the lows. And it closed higher than the previous high. Okay? And so we will be bullish, or better, we're going to be expecting the next candle to take over our buy side liquidity. And so we're expecting the price to go higher. We chart here our levels. We have here our high and our low, always of that candle alone. And we're expecting the price to go higher. Let's see if we are correct, if the price is actually going to take over that high. And yes, the price does. The price goes higher, it takes over that high, and it closes also higher. And so here we can set our expectation for the next candle for the next day. We can see here our low and we can see here our high. And we can also see that the closing of this candle was actually higher than the high of the previous candle. So we expect the price to take over the current high. Remember, we do not know where the price will be closing. We simply expect the daily movement to take that high at one point during the next day. So we expect the price to go higher than the green line here. And the price does. The price goes higher, we were correct. It actually takes over that high, but then it goes lower and it closes lower. So what are we going to be expecting now? What's the price going to be doing next? Well, let's chart our levels. We can see here in green the previous high. We can see the current high. We can see in orange the closing of that last candle. And we can see in red the low of the current candle. So try it on your own, guys. Try thinking a moment, what do you think the price could be doing next? Is the price going to take the next high? Is the price going to take the low? Or do we not know? And so do we not have a bias right now? Take a moment and set up your expectations. What do you think the price is going to be doing next? Feel free to pause the video, and when you're ready, we're gonna keep on going. And so what the price did next was this. We have here a bullish candle, but that candle actually stayed within the range, and so it did not take over the high or the previous low. And so we do not have a break of a high or of a low. And I like to use, in that case, the previous high and the previous low just as a reference for myself to have an idea of what are the levels that the price could be reaching next. Now, what do we expect the price is going to be doing next? Do we expect the price to take the high? Do we expect the price to take the low? Or we simply don't know and we simply are not that sure about the next movement? Feel free to pause the video now and set your bias for the next daily candle. And when you're ready, I'm going to show you what happens next and what's the next day. Here we have it. Here we have a bullish candle in which the high is and the closing price is much higher than the previous high. And here highlighted we have two highs, the closing price in orange and the low of that specific day. Take a moment and think about what's the next candle gonna do? Is it gonna go higher? Is it gonna take that high? Is it going to be taking the low that we see here in red, or are we not sure about the next price movement? Take a moment and set down your expectation. Feel free to pause the video, and when you're ready, we're going to keep going and I'm going to show you the next candle. So here it goes. This is the next candle. The next candle is bearish, and also it stayed within range. It did not took the previous high, it did not took the previous low. I was expecting the price to take the high, to be honest with you, but it actually didn't. So the price stayed within range. So guys, you can see it here. This is, in setting up our bias doesn't mean that we're going to be 100% of the times correct. For this reason, it's just a bias. It's not something that's written in any book that tells you 1000% of the time this is going to be it. It's something that we are expecting, but we need to keep being open to the price moving live in front of us. Now, what's going to happen after? So we chart our levels here. We have our closing price here in orange, our green line as the level of the high, and two red lines for the latest and the previous levels of sell-side liquidity. So what do you think is going to happen next? Is the price going to be taking the high and going higher? Is the price going to take the low? Or we don't know. We don't know what's going to happen because the price was within range. Let me know, set up your expectation and take a moment. Feel free to pause the video. And when you're ready, I'm going to show you the next candle. So this is the next candle. This is what happened. The price went even lower and closed below both of the old lows that we have here. And so we see here the new low and in orange the level of the closing. And so what's going to be our expectation for the next candle. Where do we expect the price to be doing next? Is it going to be taking the high? Is it going to be taking the low? Or we don't know. Set down your expectation, feel free to pause the video, and when you're ready, let's keep going. This is the next candle. The price actually went lower and it took that previous level of sell side liquidity. So it took down that low and it also closed lower. So from here, what's going to be our expectation? What's going to be our bias for the next day? Is the price going to be taking the high of that candle? Is the price going to be taking the low of that candle? Or we actually don't know what's going to be the next movement of the price? Feel free to pause a second, and when you're ready, let's keep going. We see here the next candle. We see here that the price took over that previous level of liquidity, that previous low, and it went even lower, closing below that level and forming a wick, and so forming an even lower level. What do you think is going to happen next? What's going to be our expectation for the price? Set your bias, pause the video, and when you're ready, let's keep on going. So this is the next day price movements. The price actually went lower, but it also went higher and took over both the sell side and the buy side liquidities of the previous day. That means that we have here now new level of liquidity, buy side liquidity, and a new level of sell side liquidity, and so a new high and a new low. And in orange you can see where the price closed. What's going to happen next? What's your opinion? What is your bias for the next day price movement? Is the price going to go higher? Is it going to go lower? Or we actually don't know. When you're ready, I'm going to show you the next day price movement. And here goes the candle. So here we can see that the price took over this level of sell side liquidity, going a little bit lower, and then it closed in the range. So we have here two doji candles, one after the other. What do you think that is going to happen next? So let's chart the right candle. Let's see here the price movements. We have here the last high and the last low and the closing of the price with the orange line. What do you think it's going to be happening next? Is the price going to take that high? Is the price going to be taking that low? Or we don't know what's going to happen to the price movements? Take a moment, decide for yourself, and then when you're ready, let's keep going with the next candle. And here it comes. And it's a bullish candle. So the price went higher, but also notice the price went lower. And so it took both the sell side liquidity in red and the buy side liquidity in green from the previous day. Now, what's going to happen next? The price took over sell side and then went higher, took over buy side, and it closed above the previous level of liquidity, of buy side liquidity. So what's your expectation? What's going to happen next to the price? And when you're ready, let's keep going. And this is the next day price movement. I don't know if you can see it, but the price indeed took and went a tiny bit higher, and then it started going lower and it closed below the opening price. So we have here a bearish candle. So these are the chart that regards that specific candle. So we can see in orange where that candle closed. And my question is again the same for you guys. Are we expecting the price to be taking that high, the new high, taking the low, or we don't know where the price is going to be going next? Set down your expectation, and then I'm going to show you what actually happens with the price. And here it goes, and the next candle is actually bullish. It took away the new level of buy side liquidity and it went even higher, closing above the previous high. And so we can see it here with the orange line. And so guys, yet again, what's going to happen with the next candle? We have here the green line with the buy side liquidity or the highs, the wick, and with the red line, the previous low. What do you think the price is going to be doing next? Here you can see it even better without any markups. And when you're ready, this is the price movement of the next candle. We can see that the candle went higher, it took out the previous high, and it closed higher. So we see here the charts and the markups for that specific candle, for that new day. What do you think is going to happen next? Is the price going to take that high? Is the price going to be taking that low? Or we actually don't know what's going to happen with the price movements? Take a moment, and when you're ready, this is the next day price movements. So the price did not keep going, did not take that high, but it actually went lower and it formed a low. So if you said that the price should be going higher, I would have also said the same. But in this case, the price did whatever the price wanted to do, and we were wrong with our bias. So the price went actually lower. And here you have the correct markups for this specific day. And so my question is, what are we expecting the price to be doing on the next day? Is it going to be taking the high? Is it going to be taking the low? Or we actually don't know what the price is going to be doing? Take a moment, look at the markups. And when you're ready, this is the next day price movements. So here we see that the price actually went a little bit lower and took that level of liquidity and took that low over. But then it went higher and it closed higher with a bullish candle. Not higher than the previous day, just higher than the opening price. And so these are the correct markups for this day, with the highs, the lows, and the closing price. As always, guys, what do we expect is going to happen next? Is the price going to take that last high? Is the price going to take the low? Or we don't know, and so we don't have a bias this time. And this is the price movements of the next day. The price went lower to cover that level of sell side liquidity, and then it went higher, closing higher than the price reached in the previous day. So let's keep on going. Let's put the right markups, which we have here, and let's ask ourselves, what are we expecting the price to be doing next? Do we expect the price to be taking that high? Do we expect the price to be taking that low? Or we actually don't know? Take a moment, and when you're ready, these are the price movements of the next day. So it's a doji candle. We can see it here and the price staying exactly more or less on the previous level of liquidity, buy side liquidity. And so the price took over that high. Now, I would like you to try to do the markings of your own. And so to really try to analyze the price movements day by day and see and set your bias, asking yourself what's going to happen next. So here is a plain chart. Consider the last candle. Chart your highs, your lows, the closing price of the last day. And then when you're ready, ask yourself, what am I expecting the price to be doing next? Is it going to be taking that high? Is it going to be taking that low? Or I actually don't know. Feel free to pause the video for a moment. And when you're ready, this is the price movement of the next day. We can see that the price went higher and took over that high, that previous high. So as before, take a moment, do the markings on your own, and analyze the price movements. And when you're ready, as always, my question for you, what are we expecting the price to be doing next? Is it going to be taking that high? Is it going to be taking that low? Or we actually don't know what the price is going to be doing next? Take a moment, do your charting, and when you're ready, this is the next day. So the price went higher, took that high, and it closed even higher. Take a moment, do your charting, and when you're ready, tell me, what are you expecting the price to be doing? Taking that high, taking that low, or you actually don't know? Take a moment, and when you're ready, this is the next day price movement. So the price actually did went higher, but then it closed lower. So take a moment to do your charting on this last candle, and then tell me, what are you expecting the price to be doing next? Do you expect the price to be taking that high? Do you expect the price to be taking the low? Or you actually don't know? So here is the next candle. We have another doji candle here, and the price actually went lower and took that low that we have from the previous day. Take a moment, do your charting. What are we going to expect the price to be doing next? Is it going to be taking the previous high? Is it going to be taking the previous low? Or we actually don't know about the price movements and we are unsure? And this is the next day's candle. It went lower. The price took over that low and then it closed lower. Guys, this is everything that I wanted to teach you about the bias, but there are a couple of things that I really need to remark. This is a guide to set your daily bias. It is not always 100% correct and accurate, and that's okay. But the times in which it is correct and it is accurate, it really gives us a compass, a way to follow in our expectation and clearly set up our bias day by day. You can also use it for your weekly bias if you would like to. Thank you so much for your support and great work so far. Remember, this is the way.